See, it's been in focus in the last 1 hour or so. There were some reports from agencies that stated maybe the government of India is looking to sell some stake in that in that company, in fact, and that's what explains why the stock is down close to around 2%. Mangalam joins us. Mangalam, run us through the news flow.
That's right, Nigel. There were some reports doing the rounds. In fact, government sources have told Cogencies, which is a wire agency, that the finance minister is considering divesting its stake in tobacco companies. And by tobacco companies means ITC itself, because the government does hold a formidable chunk out there. It was the health ministry which had raised concerns over the government's holding of stake in these tobacco companies. What is interesting is that there were a lot of PILs earlier written as well, and this always remained an overhang on ITC, and now there is further news flow coming on that. But the big question though really will be, is the government looking to sell only the SUTI stake or the stake of all the government entities which hold stake? Because if you take a look at the shareholding pattern of ITC, SUTI holds 9.1% stake, which has come down from 11 after they sold their stake in February. Also we have LIC, that one's the big boy out there, holding merely 16.3% stake, and all the other insurance companies also together 31% stake is what the government holds in ITC. So it needs to be known that whether it's just the SUTI stake or is the other government entities as well. But remember, apart from this overhang, the fundamentals of the stock will be paramount going forward. In FY17 February itself, we saw SUTI selling 2% stake at record highs. After that itself, the stock has moved on to further record highs, given the triggers that ITC has, that of stable tax environment post GST, also increased contribution from the non-cigarette businesses. They have been talking about ramping their FMCG, paper as well as hotel businesses. And finally, the valuations. ITC in a stable tax regime trades at a lower valuation discount to HUL as against when it's an uncertain tax regime, currently trading at 31 times versus HUL, which trades at 47 times. So there is a case for that valuation gap to be narrowed too. So this is just an overhang. Once this goes away, it will be the fundamentals of the company which will be paramount.